What's your view on gold? And do you have an allocation in your balanced portfolio? And if so, is it what's the allocation between equities and physical? Thanks.
Gold? Yeah. So that's my favorite subject. We are not all in agreement on gold at Nicola Wealth Management. So I like gold, and I could go on for about 20 minutes on why that is. I'll give you the quick version. If it's real interest rates. So if real interest rates are positive, so in other words, if you can buy a US Treasury for 4% and you have 2% inflation and you're getting a real return of 2%, you never have to buy gold. Why buy gold? You can buy a US Treasury. It's risk-free. There's no interest rate risk on a short-term Treasury bill. But that's not where we're at right now. Rates are negative. That means that you're losing purchasing power on your bonds every year. Your alternative is what? It's what? The euro, the yen. There's nothing other than gold. In over hundreds of years, gold has been a store of value. And to me, I think, and again, if you have positive real rates, I don't need to own gold. But in this kind of environment, and I was just saying about interest rates and what we're seeing with central bank policy, I want an allocation to gold. The question on how much is a good one, because if things work out like it could, and you have that stagflation, it doesn't matter what I tell you you should own, you didn't own enough. And yet, if it turns out that interest rates start rising and you have that great escape, it's not a good environment for gold because interest rates will eventually turn positive. So the tough one, we view it as a source of insurance, and so it's an amount you feel comfortable with, knowing that that may not provide a return for you in the short to medium term. So for me, I look at anywhere from 2 to 5%. I think you could have more, but I think that's a conservative amount. The split between the bullion and the stocks, again, if gold does very well, you want to own stocks because they give you more leverage to an increase in gold prices. And if you have a relatively small allocation, like 2 to 5%, gold stocks are going to give you that boost if gold goes up. The negative is we've seen gold stocks in a good gold environment still do poorly because they lose money on the cost side. So gold goes up, but the cost of mining goes up more. So that's where you would want to own bullion, where bullion looks better. So we do a split. Right now in our precious metals fund, we're about 70-30 stocks to bullion.